there's a terrifying new trend sweeping the housing market that does the exact opposite, or at least the politicians are talking about it. And it's designed to keep you trapped in the bigger is better rat race for the rest of your life. I'm talking about the 50-year mortgage. Some political leaders are pitching this as a lifeline to afford your dream home. But if you're in your 50s or 60s and signing this piece of paper will absolutely ruin your retirement, and you will be stuck in the home that you own today with no way out. Today, I'm going to expose the brutal math behind this trap, the illusion of equity, and what you should be doing instead to actually find peace. So let's dive into the numbers. Let's look into the brutal math. Let's say you buy a house and take out a $450,000 loan at a 6% interest rate. So with a standard 30-year mortgage, your monthly payment would be about $2,698. And the total interest would be $470,280 over the life of a 30-year loan. This is not unexpected. Now, if we talk about a 50-year monthly mortgage, that amount, that $2,698 a month, goes down to $2,148. And so it saves you $550 a month. Well, what's wrong with that? But here's the trap. Because you stretch that loan out for a half a century, your total interest skyrockets to $838,000 just to save $500 a month. You're now paying the bank an extra $368,520. And think about the timeline. If you sign this loan at age 55, you'll be making a mortgage payment until you're 105 years old. But it gets worse. Because of how amortization works, for the first 15 years of a 50-year loan, almost every single penny of your payment goes straight to the bank's interests, their profits. You can pay faithfully every single month for 10 solid years, and your actual loan balance will have barely moved. If life happens, as it does, say you need to sell the house at 65 or 70 to downsize, like we did, or move into assisted living, which we haven't done yet, but we may at one point, you won't have the equity you thought you did. You won't have a massive nest egg from the sale of your home to fund your next chapter. You'll be broke even though you've been paying on a home for 10 to 15 years. 10 to 15 years. That's a long time to pay to have very little. With a 50-year mortgage, you aren't building wealth. You're just a glorified renter. And your landlord is the bank. Let's talk about the biggest, most dangerous assumption behind a 50-year mortgage. Signing a half-century loan assumes your 55-year-old self and your 75-year-old self will have the exact same earning power, energy, and health. Do you think that's likely? I don't. I know it's not likely. And statistically, that's just not reality. Recent data shows that for an average worker, retirement income drops by about 50% compared to their working years. Even if you paid in your whole life, Social Security alone only replaces about 37 to 40% of what you used to make. So your income gets cut in half, but that $2,148 monthly payment, well, it stays exactly the same. And you might think, oh, I'll just keep working part-time to cover it. But a 2023 Retirement Confidence Survey found that 46% of retirees had to leave the workforce earlier than they planned. And I think that's a little low. And of those who had to retire early, 35% said a health problem or disability forced their hands. You can't negotiate with your health, and the bank doesn't care if your back hurts. They want their money every month. When we sold our big house and downsized to this 55 plus community, our goal was to eliminate stress. We wanted to own our time. If your income drops, but your massive mortgage payment doesn't, you aren't living in a dream anymore. You're living in a financial pressure cooker. A 50-year mortgage bets your future peace against unpredictable health. And that's a gamble no one should have to take with their golden years. Why are these 50-year mortgages even becoming a thing? Why are we even talking about these? And it's because the housing market is incredibly expensive and people are desperate to buy into the idea that bigger is better. They've always thought bigger is better. And even it means chaining themselves to a bank until they're 105. But what if the solution isn't stretching out the loan? What if the solution is shrinking the footprint? When we downsized to our condo, we just didn't shed square footage. We shed the financial anxiety that came with it. A home is supposed to be your sanctuary, not your master. True wealth in retirement isn't about how many bedrooms you have, or what a big yard, or how pretty everything is. It's about having options, about having your health, and having control over your own time. So if you're staring down retirement and feeling squeezed by housing costs, don't fall for a 50-year trap. Ask yourself, what does enough actually look like for you? Because we can tell you from experience, when you finally discover what enough is, your life doesn't shrink, it expands. And frankly, we'd love to hear from you. Have you seen these crazy long-term mortgage loans popping up in your area? Or if you've already downsized, what was the biggest relief you felt? Let us know in the comments below. We really enjoy hearing from you. And if you're wondering how to actually make the math work without a massive nest egg, we did a whole video on why the traditional $1 million retirement rule is completely wrong and how we're making it work with much less. Click the video on the screen right now to watch what's next. We'll see you over there.